I am very passionate about AI. The valuation of those companies at the time of the exit exceeded $10 billion. AI is going to be a huge positive force. Everybody heard of Carvana in the US. We have a company in India doing very similar things, but doing really well. It's called Droom. Assume this is the money I'm willing to let go and then invest. Do you believe every AI company is going to succeed? No, there's no way.
Hello, welcome to the Network Silicon Valley Club. Today we have our guest, Reddy Mallidi, a partner and CEO at Seventrain Ventures, author of the book AI Unleashed. Reddy, how is the day going so far?
It's a great day to be here with you, Maxim. I'm super excited.
Could you tell me a bit about yourself and your company?
Absolutely. As you mentioned, I'm a partner and COO at Seventrain Ventures. I have over 25 years of business executive experience at companies like Intel, ADP, Autodesk. I led business side as well as technology side. My superpower is in bringing technology and people, operational excellence, customer side all together for outstanding business value, to create business value. As an example, I achieved top 1% results in customer satisfaction, 95% at Autodesk. And I also had the highest employee engagement when I was at my previous role, 87%. So I feel very good about combining all these aspects from people side, operational excellence, AI, very passionate. I am very passionate about AI. And as you mentioned, I wrote the book on it to help executives and other leaders to bring AI into their companies and functions.
And right now you are a partner at Seventrain Ventures. How much money is currently under your management?
We're slightly different type of venture capital. We're more of a venture development company. So we don't keep how much AUM is under versus we look at it and then say, hey, we invested in over 40 companies. We had over 15 exits. And the valuation of those companies at the time of the exit exceeded $10 billion.
So what is the most significant multiplier with?
This is in terms of the specific number, we don't openly give it, but typically what we have done is invested in safe instruments, convertible, so we tend to get a big discount. And we have done way better than an average VC in terms of the return. So we did very well. A couple of examples, UiPath is a really good investment, as well as Airbnb. We invested in those. Everyone knows those two companies, but we have many others we have not exited, and we still have investments in it.
How did you find that startups?
A great question. It's myself and the other partners in the company, we leverage our network and we attend conferences, and then it is through the network that we find which companies, the startups, are embarking on a really great technology, really great products. Once we are introduced to those founders, so we establish the relationship. When we see value in the technology, when we see the value in that founding team and management team, then we nurture the company. We open up our networking, and when they're ready to get the funding, maybe for their go-to-market expansion or to take their product to the next level, then we activate our network to raise the funds, and we advise these startups. So we're very selective, having that nurturing relationship for a long time before we invest. It increases our chances of being successful. Instead of the typical 10%, we are way better in picking the right companies and in picking the investment levels, and our returns are really, really good.
What future trends do you see coming in venture capital?
Well, we all know, Maxim, the VC market has been slow. It's last 18 months or so with all the interest rates. I think it's a good thing in a way because there is a reset happening. Before it was all about growth at any cost. Now there's more of a reality, profitability. VCs are looking into profitability as well as PE companies, of course. Everyone is looking at EBITDA. That became more fashionable these days. And the trends I see is there is going to be a reality. The go-go days of last 5 years, remove the last 1 year or so, they're gone. There will be some consolidation, but I think the trends, if you look at the macro trends, AI is going to be a huge positive force. Sustainability is going to be a very positive force. There are going to be huge leaps in these areas, as well as in life sciences. I actually believe that currently we are standing at a huge transition, just like the Industrial Revolution that happened a few hundred years ago. For VCs, looking at the trend and picking the right area, you can't focus in every one of these, but there are so many good opportunities in the next 10 plus years, I believe, for VCs. Of course, the current environment makes it a bit challenging, but also it will bring the reality. It will make some consolidation in the industry, but I'm still very looking at the long term, very positive, and I believe these three areas, AI, sustainability, and life sciences are going to be huge opportunities for all the VCs.
Could you name the latest promising startups you have invested in?
We have a few. I will give a couple of them. One is, everybody heard of Carvana in the US. We have a company in India doing very similar things, but doing really well. It's called Droom, is one of our investments. We have also invested in StateSet. This is an e-commerce AI company. And Webidoo is another one. This is an European company. It's all about the digital marketing and leveraging AI for that. So we are very technology centric. Mm-hmm. And we have other investments, but these are the ones that I can tell you about.
And where do you source such deals?
This is again through our network. It is what happens is we're introduced to this. We don't raise like typical VCs. They raise funds and then VCs are pitched. Lots of these startups come in and say, hey, you go through the 1 day, 2 days of these startup founders coming to you and pitching. No, we don't do that. We invest in relationships. So that helps us understand the technology, the team, the founding team, the leadership team. That's why we have significantly higher success rate with them. And by the time we invest, by the time we activate our network to invest in, we already know that this company is going to be successful.
I'll give you 3 options to evaluate a startup: team, technology, and traction. Which one do you think is the most essential for you?
I believe the team is extremely important. Team is very important. The reason I say that is you could have technology, but if the team doesn't know how to build a product, which is super essential, and if the team doesn't know how to get it to the go-to-market engine, so the 2 big things, which without the team, the technology can sit idle. It's not going anywhere. You're not going to get the traction if you don't have the right team. So that's why if I had to pick, I'll pick the team.
Could you describe yourself in 1 word?
Positive.
Let's talk about self-development. What top 3 books would you recommend investors to read?
I went to Columbia Business School, Maxim, and I love security analysis. I read this one 25 plus years ago, but it is one of the best books if you are looking on investment side. This was by Benjamin Graham, who was mentored to, everyone knows this, in Warren Buffett. This is more on the fundamental analysis. It's proven, no matter it's 80s, 90s, or 20s, 2020s, the theory, the investment philosophy has a lot of value. I love this book. The second one I recommend is, there's a book, this is about Bill Campbell, who mentored many, many people in the Bay Area, in the Silicon Valley, had a high tech. He was actually not a high tech guy. I mean, again, he was from Columbia, happens to be. He went to, he was a Columbia alumni, but he came here and settled in the Bay Area. It's a $1 million coach. It's very practical, how you want to be a leader. This is the best book. How you want to be a good human being, how you want to be a leader, how you want to treat people. This is the best advice you would see. It's very practical. It is written by Eric Schmidt, of ex-CEO of Google, and a few others who worked with Bill Campbell. A lot of wisdom and life lessons. That's my second book. And there are other books depending on, the technology. Eric Schmidt wrote a book on AI with Henry Kissinger. That's more philosophical, higher level than my book. My book is more practical guide. This one is looking at the macro trends and then how companies and countries need to be prepared, and the societies need to be prepared for AI era. So that's another great book I would recommend.
Could you share an example of mistakes you made in your investment career?
I'll tell you, Maxim, when many years ago, when I first opened my account with a brokerage, at that time it's like a full service brokerage companies, and you didn't have like free trading, all that stuff that we have today. And I actually didn't even know, this sounds very silly today, but I didn't know I had to pay fee for whether I bought 5 shares, 100 shares. I still need to pay individually for each of my transactions, even if I submitted one transaction. So I didn't even know that. This was in the 90s, but it feels very silly. And but having gone to the business school and having technology and computer science engineering background, it makes me very data-centric. Do I do correct decisions every time? No, sometimes what happens is you believe, hey, this product is really great. You fall in love with that company because you like the product, and then you tend to ignore. I'll tell you, a while back, I invested in Sun Microsystems during the days because at that time, I used to write code. I used to use Sun workstations and servers. Oh, this is a great company. I fell in love with the technology and product, but beneath that, what was happening in the marketplace, I didn't pay attention to. And you know what happened to Sun Microsystems, right? So it was a mistake. So it was obviously, I lost money on that. It was the heydays of Sun and .com bubble bursting. So you learn from those mistakes, but that was one of my mistakes.
And how much money should investors expect to lose before becoming experienced?
Individual tolerance. We all learned in a risk and return. If you have higher risk, then you may have a higher return. It's that individual tolerance. Some may feel very conservative and then say, oh, I'm not willing to lose any money. And some people may say, even if I'm close to retirement, I'm going to invest 100% in high growth stocks, which may go down from $100 to $10 in a whim, on a whim, right? So it all depends on your individual risk tolerance. But this is what I would say. If you think, depending on your risk tolerance, you should say, this is the amount I'm willing to let go. If you're a high growth investor, then you need to say, assume this is the money I'm willing to let go, and then invest. It may come to zero or it may grow 10x. So that's the, but if you are conservative and then say, hey, I'm willing to take 10% risk, maybe 20%, but I'm willing to go for 30% incremental growth. So it all depends where the balance you want to strike.
And what media channels do you use to update yourself about trends in the industry?
Typically, I read quite a bit. Obviously, Bloomberg, CNBC, but I don't believe everything that is, especially CNBC. Well, there's a lot of hype. We know. I worked on Wall Street for a few years. This is before going to the business school. For any given stock, people are reluctant to put a sell on a stock. You have more people always saying buy or neutral than sell. How many people are willing to go and bet against NVIDIA? People are competing to say, oh, well, this is going to be a $2,000 stock. And it's the same thing when you look at the history. Same thing with Sun Microsystems, Yahoo, and all these companies. I'm not saying, you go through the cycle, right? I'm not saying NVIDIA will go through that, but it is the hype cycle.
What else do you think venture capitalists need to do to be successful investors?
What I believe is don't get caught up in that hype cycle. Because as earlier we were talking about, it's all about growth at any cost. That was the mindset. And I don't know if you watched this Silicon Valley episodes. It's we don't talk about revenue. No, we are all pre-revenue. That's it's funny, but keep always the naysayer's hat and keep in the back of your mind what else could go wrong. Don't caught up in the hype cycle. If you get caught up, then you may be investing irrationally. In AI, do you believe every AI company is going to succeed? No, there is no way. There is no way. But there is FOMO that is happening right now with some of the investments. So have that mindset. Do the due diligence. Is this going to be profitable? Is this technology going to be integrated? So I'll give you an example. So if you're creating chatbots to do customer experience and that's your value proposition or that's your product, just think about the companies who are entrenched. What happens if they provide the same capability? They already have established market share. They already have a number of clients. They just incorporated this chatbot that enables the self-service. Then what happens to your value proposition? Can you compete against them? Not really. So you are a wrapper around someone's value proposition. So that's not going to survive. So just be careful with the hype. Have that, hey, profitability is important. Making traction in the marketplace is important. All those things. Just don't go by the hype. That's all I would say to the VCs. Then you'll do okay.
Thank you very much for sharing your experience, Reddy.
Oh, absolutely. It was my pleasure talking to you, Maxim.
It was Maxim Strelchenko, the founder of the Network Silicon Valley Club, the close community of venture investors.
Thank you.